morning, everybody. Welcome to the Trading Market Technicals morning call video for Thursday, October the 4th. And boy, what a chop fest trading yesterday. A lot of ups and downs and flags, and markets were just tossed around all morning until it finally kind of broke out about 11 o'clock or so. Topped out right around lunch and then started to sell off again and then rally into the close. You'll see that right here in a 5-minute chart. But lots and lots of stuff to talk about. We're looking at some patterns. I'm going to get to the charts, but I just want to quickly make a couple of points here. We had ADP private payrolls rose by 162,000 in September, beating estimates of 140. We also had the ISM service report was stronger than expected. So that's actually very good. It's we don't have contraction. We have expansion, 55.1 beating 53.5. So right now, I'm looking at a bunch of flags, and I'm saying, well, wait a minute. The flag patterns that we mentioned yesterday, they have not triggered, so we're still in the flag pattern. But so when I see things starting to develop and I don't see the patterns working as quickly as I think, I said, now, wait a minute. Could there be something else brewing? And sure enough, I'm looking at another I'm looking into these charts, and I'm looking at a possible triangle pattern. So we're going to see which pattern is going to play out. And remember, when you have a pattern, we need a trigger, either a lower trend line break, a higher trend line break, depending on what pattern you're looking at. But I'm going to go into the charts in a bit, and I just want to see that the what we're looking at, and I'm saying, well, we may have a market top here, is that we have divergence, right? We have divergence from risk-on assets to risk-off assets, right? So we're looking at the XLV, the XLU, consumer staples, consumer discretionary, and utilities. They're making new highs where risk-off assets, which would be of course, the high-yield and junk bonds, the JNK, which is the ETF, the S&P 500. We have oil risk-off, and of course, the gold is a safety haven asset, supposedly. So that's actually rallying right at this point. So gold takes a cue from both sides, actually. So it's a little bit difficult to determine what is it doing at this time. But if you look at that, saying, wait, we have money coming out of tech, big cap tech, semis, oil, S&P, because we did have some weakness the last several days last week. Now we're up this morning. We basically closed up yesterday. And I'm saying, the markets are basically all over the place. But you can't deny the fact that we have some risk-off assets. So what do you do, right, as day traders? And I am basically not taking any positions. Nor do I want to at this moment where this market is trying to figure out where the next move is. So that's a bit risky for me. I'm not looking to do that. And the day trading, when the markets are chopping like this, it's best to stay aside and or look for a catalyst in a stock, whether it be an upgrade or downgrade. Somebody's talking negative about it, or some sort of a capitulatory trade where the market stock just runs up real quick, and then you look into fade that. So that's the basic only moves that I'm looking for intraday. And if I don't do anything, I don't do anything. I'm keeping my pallet dry for the bigger move to come. So we're looking at getting back to my points. I'm looking at these weakness in the risk-on trades, and I see money flowing back into the healthcare utilities, which tells me at one point markets are going to try to sell off. But we're waiting for, and I think it's going to be the non-farm payrolls, which are going to come out tomorrow. I think that's going to be a key driver, as it always is every month at the beginning of the month, and it usually sets the trend for a couple of weeks. Now, we are into seasonal weakness. As I mentioned in October, we really haven't seen much of it, but we are into seasonal weakness, which I want to bring that also to your attention to make sure that we really keep an eye on a lot of these futures. Now, I noticed that the minis, the E-minis, and the S&P, the SPY, they're really having a bit more activity to the upside. There's definitely a bid under this market, so be careful looking just to short this market. It's not really wise to do so unless you have some sort of a catalyst, making lower highs and lower lows, and really breaking down some key pivotal lows. And we haven't had that at this time. So I want to roll into the charts, and I want to show you what I'm seeing here and what we're looking at. Now, yesterday I said, we have a downtrend channel here, and we broke out of this this here at the end of the day. I said, look, looks like we might be breaking out. We're going to pull back in or what? So now I take this away, and what do we have? We have a bullish falling wedge on a 5-minute. Again, smaller time frames. They take a little less precedent. But if you're looking for a trade, we had 2 days of down days. We broke out. So this to me looks more like a bullish falling wedge than a downtrend channel. And now we're out of this wedge, right? So the next step usually is a little bit of a back test, maybe a pullback in here right around this area, and then a continuation higher. Now that's just a 5-minute chart, but you can see how choppy we were. We gapped up, filled the gap, ran back up again. Then we had the ISM number came, rallied back up, and then we just kind of flagged all the way up into the middle of the day, and then again sold off hard. 2 candles, sideways consolidation, another dip lower into this area of which the 200 period held, and then again a push back into the close. So really, really choppy trading, real choppy trading. This is not my type of environment here. Now, if you're scalping, absolutely, you could. If you're looking to scalp, I'm not a scalper, but if you're looking to scalp, this is something that that you might be interested in. That's why you might like this type of atmosphere. Now, I want to get into some charts. I'm going to get into the XLP. I want to cover those defensive names, and then we'll go into the chart patterns and see what we're looking at. But I want to talk about the dollar real quick. I mentioned here we had a nice bear flag into the 200 period. Now we did get our pullback, so this could be looking at a bull flag pattern now, right? So this is your pole. Here's your flag itself. So this could be possibly looking at a bull flag. If this is the bull flag and we do manage to break higher, again, you're going to put money coming out of equities and into these safe haven currencies and the safe haven stocks and sectors such as utilities, healthcare, and of course the consumer staples. So I'm going to get into that next, but just take a look at this. This is actually quite bullish. Now we could actually obviously still roll over into and forming a larger bull flag, but this is constructive here on the bullish side. So use caution, but want to definitely be looking at what's happening every day to the dollar and the euro, and I'll show you an FXE chart. But let's take a look at this. Consumer staples. Look at the outperformance of the S&P. Okay, and we're making new highs here. So no denying that money's coming back into the consumer staples. XLU, utilities, same thing. Money's coming back into utilities, breaking out of the 50-day moving average, below the 200, above the 200, excuse me, and above the 50. So very constructive, very bullish here. Okay, take a look at the healthcare. Same thing, healthcare, new highs. So you can't deny that money's coming into these, rotating out of these risk asset currencies, and I'll show you the the SMHs. I showed you the XHB. Now we did have a pop yesterday, but you could see how clearly momentum is waning on these risk assets. So we want to just keep an eye on it. Nothing really, I haven't gotten a full-fledged sell signal in the markets yet, but I could see that things are rotating out of this area. Now, let's talk about what we were seeing yesterday. FXE, which is the Euro ETF, clearly bear flag pattern, flagpole, flag here, and we're at the bottom of this area here. This was yesterday's close. We are getting into some oversold territory, so maybe we pop back up into the flag, haven't broken down and haven't broken out of the flag as well. So this is something that I want to watch moving forward here for the FXE. If you do not have the euro currency itself, the euro dollar pair, you might want to look at the euro spot, or the FXE will do just as well. Okay, now I mentioned we had these head and shoulders pattern, right? And when they're small head and shoulders pattern, it's tiny. It's not, not months and months of a big head and shoulders pattern, which we had back here. We had a little small head, left shoulder, right shoulder, and that bear flag pattern, right? We had this bear flag, and we're still in this bear flag. But if I take this away, can this be a symmetrical triangle within the bear flag? Absolutely. So if we haven't broken out yet, and I'm saying, well, wait a minute, could there be a bullish pattern here? Well, a symmetrical triangle could be either or a breakdown or a breakout. But I'm going to be looking for either a breakout above 1458 in the S&P cash, or a breakdown, and let's take 2 days low of 1438 to really trigger this bear flag pattern here. Really, could even 1442, 1438, 1442 would trigger this bear flag. So that would take that away, make this a bear flag, and then that head and shoulders would start to work out. Or a break to the upside would ultimately test the highs here at 1476 in this area, and then this would be the symmetrical triangle that I'm seeing. So right now we have two patterns, one symmetrical, one bear flag. So it will be interesting to see how and what plays out. Okay, and I'll show this to you on the other charts. You can see the same thing. Spiders, SPY, head, left shoulder, right shoulder, bear flag pattern, and if I bring this here, we have the same situation, obviously. Okay, and this could be a symmetrical triangle. You take this out, and then look at what you have here. So I'm really interested to see. We're running the line here, this 20-day moving average. So I'll be really curious to see which way this plans out. And I have a feeling we have initial jobless claims today, and then tomorrow we have the non-farm payrolls. And I think the non-farm payrolls is just going to nudge this market a little bit more. Now, look at what I see here in the 30-minute chart, right? Left shoulder head, left shoulder head, right shoulder. And again, here is this, I had this area here, and I showed you yesterday this line on this bear flag pattern, right? Well, this could be a symmetrical triangle, and we eliminate the head and shoulders in the bear flag. So we don't know. We're going to wait and see what price tells us, and we'll react after the price pattern. Same thing on a 15-minute chart, guys. I took the head and shoulders off, and I just wanted to show you how easily this looks like a symmetrical triangle. Just take this down a little bit right here and bring this out a little bit more. And you can see the expanding triangle, what I'm talking about. So, again, we always need a trigger for our patterns. And if they don't trigger, they don't trigger. That doesn't mean you can't short or get long stocks during the day. But make sure you have some sort of a catalyst when you're trading these stocks. It just helps a little bit better with directional. Okay, IWMs, definitely the weaker of the other indices. But head, left shoulder, right shoulder, again, same thing. Not much of a symmetrical here. I mean, you can go, you can put a pattern here, put a line up, and something like this. Because just a little bit deeper. I really don't like the way this pattern looks, so I'm gonna eliminate this and just say that we're working on the this area here. We did break early on, but then we rallied back up again. Generally with the market and that good ISM number we had yesterday. Transports. I said sloppy bullish falling wedge, but no denying it. We did break out, and I did say that if we do break out, it's going to help equities, no question about it. But still needs a lot of work. We have a lot of overhead resistance here, 20, 50, and 200. So to me, it's nothing but just an oversold bounce, probably 89, 50, 90, $90 somewhere in here, and then look for a rollover again in the transports. But no denying it that we are oversold, as you can see here. Okay, we're starting to roll back up, making higher highs in the histograms. But again, guys, to me, it's just an oversold bounce. Okay, SMH, symmetrical here, no change here. We didn't break down below this area. Want to call it a pennant, if you will. But we're still looking at a breakdown. I'm looking for lower high in the SMH. Money coming out of the SOX and the SMH. Apple. Let's talk about big cap tech. Had a nice call up here early in the week. We had a nice call here on the buy side. We did break out of this trend line. So I did say that, you know what, Apple would be a tester here. 681, if you're still long, just bring your stops back up here to 680 and then see where we go. If we fail here, then look to retest the 50, and then ultimately this trend line here is 630. 630 would be the next stop lower if we fail this area down here. So so far so good. We had a couple of good trades in Apple. Again, I don't trade it, but a lot of the traders and people that follow me had some trades long, bought some options, and it actually is still long the option. So hats off to everybody that traded the Apple trade. Qs, big cap tech, last one. I'll let you guys go. Same here. Nothing really much to say about this. We are in this flag pattern as well. We could call it a symmetrical triangle if you wanted to. See right up in here, a small little pennant. So we're going to wait to see which way this thing breaks. Now, we do look for trades every day, but we like to see where the market is, and we like to go with what the market is telling us. Okay, so use caution. Initial jobless claims today. Be careful, and then we have the big non-farm payrolls tomorrow morning. Let's see what happens today if we break out or break down out of these patterns. All right, guys, have a great day, everybody. Take care.